Hi guys, this is Brian Leni of Junior Stock Group Premium. Today with me I have OIII Mining, Jean-Félix Lepage, Director of Operations. We're going to go through a little bit of OIII Mining and why I think that's such a compelling investment thesis. So before we get started get into the details, can you give us an overview of OIII Mining?
So OIII Mining is an exploration and development company focusing on the Val-d'Or area in Quebec. So we're progressing our main asset, the Marban project, to PFS at the moment.
Okay, so Marban is your flagship. You guys just released news that gave us an update on your progression towards a PFS. Can you tell us a little bit of what you covered in that news release and why it's so important moving forward?
Yeah, so for at the beginning, there's earlier this year we published the resources that will serve as base for the PFS. So now we have a 2.3 million of measured and indicated. Now we disclose that it will be step change in the design from the PEA. First thing is the increase in throughput for the mill. So it was 4 million tons a year at PEA. Now we're targeting 6 million tons a year, 50% increase, but only with a 15% increase in peak mining rate, meaning that we will improve the mine sequence and our mining approach as well. Also, what we disclosed this week is improve recovery at the mill. So both coming from better results at the lab and trade-off that we did for the study itself. And also there's a tailing. We did review our approach for the tailings. So instead of having that big dam that we had in the study for PE, we have a smaller dam, smaller tailings footprint, and we will reuse some of the pits for deposition as well. So globally, what we say so far is we know that we're looking for a better project at the PFS.
Okay, and just to orient people, where exactly is Marban located?
So Marban is west of Val-d'Or. It's at 12 kilometers straight line from the Canadian Malartic pit. So it's really on the trend of different operating mine as Goldex and the Kena mine. So it's really in a prolific area where in Val-d'Or, when we look Val-d'Or as a whole, it's at 30 million ounces production over the years. So we know there's more, and we're targeting that.
Oh, very good. To me, that's one of the highlights too. I think Val-d'Or is a premier jurisdiction, and I think you guys are right in the heart of it, making you very attractive to the senior miners. Moving on from that, one of the biggest parts of the OIII value proposition, from my point of view, is your ability to, monetize what I would probably consider secondary projects. Very recently, you just did a deal with Cartier Resources for the East Cadillac project. Can you tell us more about that deal and why it was made?
Yeah, exactly. I think it's part of the strategy at OIII. So since the inception of that company, it was the Garrison project at the start with Manita, and now doing the same with the East Cadillac. So the idea is to put both two projects together that will make a better project than just the sum of the two. So that's the idea. And also, we're really confident that the team there is fully capable of progressing the project and having good results there. And yeah, that's the idea.
Yeah, it is. So, guys, for those that don't know, OIII has, I guess it would be just over a year ago, you monetized your Garrison project. That's now with Moneta Porcupine, and then most recently with East Cadillac. So OIII retains shares. They have interest in that, and this also goes to their bottom line in terms of their value proposition. And to me, as an investor, I look for protection to my downside risk, and I think OIII is, if not the premier company for protecting your downside risk. The value proposition is very clear.
If I can add on that,
yeah.
I mean, so we are a strong cash position and an investment position. So when we look at it's together 95 million of cash and investment for our 140 million market cap. So obviously there's a big downside protection there.
Absolutely. And so, why do you think senior miners want to be in the Abitibi, or maybe even more specifically Val-d'Or? What is it that draws these companies to want to be there?
I think the history of the district speaks for itself. I think over the years, on top of the production, there's also always been presence of major in the area, and I think when you look at Dig and Canadian Malartic is a good story about that. That even though there was a mining there in the past, there's even more, and that's what they are targeting as well, and that's what we're proposing with the Marban project. Is there was mining there a few decades ago, and then we're going back there with different set of eyes, and I think all the major are recognizing that. So.
Excellent. And so I'd be remiss to, we've got the value proposition, you've got ounces in the ground. You also have blue sky potential at Alpha. So can you tell us what's going on at Alpha and what can we expect in the second half of this year?
So I think there's the blue sky potential. You're right at Alpha, but there's also at Marban as well.
Okay.
So Marban is a huge property, and what we're targeting with the study, it's only a part of the property.
Okay.
So now we're working the greenfield side of the property. And to go back to your question with Alpha, so there's multiple projects inside one. So it's a huge property that covers the Cadillac break, the huge prolific break, and now we're focusing a little bit more on the Bulldog area, which we will deliver a first resource estimation later this year.
Oh, very good. Okay, guys, the value proposition in O3 to me is very clear. You get protection with ounces in the ground at Marban, a PFS coming out in Q3. You've got exploration and blue sky on both projects, and a resource estimate, the maiden resource estimate at Alpha, plus all the cash and investments. To me, it's very compelling and a reason why I'm a shareholder. If you have any more questions, please let us know. Thank you very much.